Felix here. You may have seen the bull market today. You might be excited about it, but is it going to last? What kicked this off and what could kick this down again? That's what I want you to understand. Really, really important date coming up. Important you know which one that is. Before we get into that, get your hands on this free benchmark. Goldman Sachs have given us their top 15 beaten down stocks. FelixFriends.org/top 15, FelixFriends.org/top 15. It's free. It's a beautiful benchmark. It'll make you smarter. I promise you. Get your hands on that. That's why I make them, to make you smarter, essentially. Now, of course, none of this is financial advice. You know that by now, and you love the disclaimer, don't you? I'm sure you do. Former lawyer talking here. I can't help but put disclaimers out. Now, the numbers you're seeing today, we've got the higher unemployment rate of 3.7%. That's, well, worse than expected for unemployed people, but better than expected for the market, as we were expecting 3.5%. But the non-farm payroll private data, as in how much hiring there's actually in the economy, came in very, very strong at 308,000. So the labor market hasn't capitulated. So this rally isn't particularly strong for that very reason. Where are we seeing the numbers come from? Well, the labor force contribution change here is really what's driving that. We're going to look at that. We're also going to look at participation rate. We're going to look at the Fed fund rates, the Fed futures. We're going to look at the pay gaps, and then the most important thing of all, what's happening on the 13th of September here. So the participation rate is crept up, and that's something that the Fed loves. It's been way below pre-COVID. So this here was pre the big C. And that's where they wanted to get back to. And obviously, we haven't been there anywhere near it. But now the gap is only 1 percentage point. So we are moving very much in the right direction, breaking this negative cycle of people just going, cubicles suck, traveling to work sucks. I'm not going to do this. I'm going to work from home. I'm going to trade options and make a ton of money. Look at one of these, this here. This is a student of mine who's incredibly cautious. He's paper trading. He's doing the smallest trades you can humanly make. And he's got $489 here in profit. This is a paper account. I always want to be super transparent about that. But the trades look very realistic. These are done on OptionStrat, which is a free tool, which I highly recommend. It's brilliant. Go to OptionStrat.com. I'm not selling it or anything like that, but it's a pretty good tool if you want to start learning options. And he's done, a couple of trades I wouldn't have done here. I wouldn't have done the one on BBBY. I think that's fishy, and I probably wouldn't be touching Mara. But other than that, he's done a really good job, and I've given him that feedback, of course. But it's not brilliant. Smallest trades possible, almost $500 in week one. If you want to learn how to make that kind of money, generate passive income, have optionality in your life, whether you want to go to work or not, retire early, do whatever you want, hang out with your golden retriever, come and join our master options program. Here it is, FelixFriends.org/options. Coupon code is there. Build wealth. It expires when? The end of the Labor holiday Monday. FelixFriends.org/options. Check that out. And let's keep running through the data here. This is a majorly data-driven channel, so if you don't like charts and data, I'm sorry. That's all I can say, really. I can't promise you I'll show you less data. What is this? This is the September rate hike that we're expecting. 61% of the market is now expecting a 0.75% increase. That isn't actually that much, because yesterday that number was 75%. So we've gone from 75% to 61% in one day only. And that's just a little bit of an improvement from our point of view in the labor market. And you can see that here. Yesterday, 75% thought we would get 0.75% hike, which is this number here. And today, this is a 0.50 hike. It is only 61%. So, but still broadly, I still expect it. I'm with the majority on that one here. Pay gap. If you just got a pay rise, I spoke to one of my coaching students yesterday. He said, we got 6% extra. And I think I got screwed. And I said, yep, you did. Because inflation is at 8.5%. And even that number is pretty massaged. It might be significantly higher for you, depending on how you spend your money. Whereas average hourly earnings have gone up 5.2%. If you work in manufacturing, that number's gone up how much? 0%. Zero. Nada. Zilch. And that, of course, means you're working for at least 8.5% less money than you were last year. Surprisingly, unions seem to have lost quite a bit of their power. You would have seen strikes and all that kind of sort of stuff in the past. You don't see that right now, right here. This chart, however, is what we were talking about, the most important thing. CPI is out on the 13th of September. That is what is going to make or break this market. We are expecting it to fall. And if you watched my video on that the other day, you'll know why. Because there is a basing effect. We're plateauing with energy prices and so on. If the oil price goes to 100 a year ago and it just stays at 100, then a year later you've got how much inflation? 0 exactly. So that's what's going on here. Last year, September to October, October to November, inflation really shot up. So it's much, much harder for us to repeat that, which is why you're seeing this kind of trend downwards between these 2 months and then a slight flattening out here again, November, December. So if CPI is 0% month on month, you're going to get the white line. Say it's 0.5%, then that would be this one here, which would still get us to a lower number than we are at right now. But hopefully we're going to get a little bit less than that. And inflation is going to be heading towards the sort of 6-point-something%, I think would be the most optimistic scenario here by year end. And that would, of course, show the Fed, well, we are doing the right thing. Inflation is heading in the right direction and the market will start to love that. So I am hoping for a year-end rally on the basis of inflation numbers. I'm hoping for great big interest rate hikes in September. Get it out of the way, get it done with, hit us with 0.75%. Hey, why not make it 1%? Let's get this over with so the markets can price it in and move along. That's essentially my view on that. What are you going to do right now? Well, after you've downloaded that, there's only one thing left to do. If you really want to understand what's going on in the market, I highly recommend you watch that one here. Click on that video and enjoy. Thanks for tuning in.